Joining me today is Michael Torres, CEO of Adelante Capital Management. Michael, thanks so much for joining us.
Great, nice to be with you, thank you.
Now, your company's flagship strategy is to seek high current returns and long-term capital growth. Where are you finding those opportunities right now?
Sure, well, Adelante has been managing money now for over 20 years, and it's been obviously a terrific environment to finance the growth of the industry, 100 million to over $1 trillion. You know, when you look at it, at the end of the day, real estate, we house the economy. So when I think about that today, the real opportunity is really around shelter. So different forms of shelter that's really related to housing. Less about goods today and less about businesses because those are in flux. Obviously, we're housing data in a new way too.
Now, with more generalists expected to enter the REIT market, in part because of the changes with GICS, do REITs have to make any changes in terms of how they present their strategy and balance sheet to these new investors?
I think as the conversations we're having with management, I would expect that to happen over time. There is some conversation about more thematic views on how do you look at the real estate industry over time. Themes need to actually have strategies and true tactics that will separate the companies, and I think that will happen over time.
And do you think that's going to sort of depend on the sector and how investors will be able to understand it?
I think it's probably less about sectors. I mean, I think one of the big things is around ESG, for example, and so that's going to be an application to attract not only dedicated money, but generalist money.
And lastly, how would you describe the current gap between public and private valuations? And do you see anything that's going to come along in the near term to change that?
You know, we're in the late cycle of the real estate industry, and so capital is becoming much more discerning. There's less opportunities, over our professional career. Obviously, the industry built for buyers, and so there was really, as the economy was growing, you had the ability to create portfolios of new assets all the time. Retail, clearly, we've slowed down the amount of retail we're building, and so people are getting selective how to identify in different units. And so I think that bifurcation is having implications in pricing, and that's what you're starting to see manifest itself. I think that, clearly the public markets since the end of July have indicated, hey, the regime change, the election regime change, as we move into 2017 with other bank constraints that may or may not happen, we're just in that part of the cycle. And so there's differentiation, creates obviously opportunities.
Michael, thank you so much for joining us.
Thank you.
For more from REITWorld 2016, be sure to visit REIT.com.